Bob's for the last couple months really focused on investing in oil and gas, but as a long-term investor, which is fascinating, right? Because most people are jumping in when the war starts or trading around it, day trading.
Mm.
But you've kept us kind of honest on core positions. Has anything changed in the last few days now that peace has almost broken out? A
Yeah.
resolution has broken out. Is there something we should be thinking about doing?
Well, I did move a little bit of my EOG into EQT and EXE. So I'm not reducing my position in CNQ or Chevron um, just because I like those names. And they've held up very well relative to the oil price. And I think there's still good value in those names based on the 12 to 18 month strip where oil prices are. So I'm not reducing my positions in those. But EOG, I did move a little bit of my position, a little over a quarter of my EOG position in the EQT and EXE. And the reason being is that those two names are almost pure natural gas names that have sort of been taken down in the whole sell off of energy when natural gas is held in here. Natural gas prices never ran up like oil prices. So as we're looking at natural gas prices, they're holding in here above $3. And these names have sort of been thrown out. There's the baby that's been thrown out with the bathwater that I think are very cheap here. And with where natural gas is and where we see the long term fundamentals for natural gas, which we talked about ad nauseum, given the long term growth in AI data centers and LNG and just U.S. industrial production, we think these are very good long term holdings at very good levels down here where they are today. Expand Energy at over a 52-week low, EQT not quite there, but still, these are very good names where, granted, if oil continues to get hit here and the energy sector continues to sell off a little bit, they will probably continue to get hit perhaps a little bit in that wave of sell off in oil. But given the hit that they've taken with natural gas prices holding in here and natural gas prices not getting hit while oil's gotten hit. I think if you're putting new money to work, that's where I would look at in energy. And like I said, I moved a little bit of my oilier position in EOG over to EXE and EQT. Those two names are down too, but not as much as the oilier names. So besides buying some SpaceX right on the IPO, that's the only thing I've been doing here.
All right. So SpaceX, just want to be part of the party?
I just want to be buy that on the momentum here. We'll see where it takes it, but I'm already up over 30% here, so we'll ride it while it's running here.
Yeah, it's pretty amazing. And then he came out with a little bit of sneaky guidance of what some of the revenue might look like. So he knows what he's doing, at least on building a momentum. So we'll keep an
I
eye
think it's
on that.
I think it's more of a cult stock right now, so we'll ride it while it is.
Mm. So Kevin, what when you look at the names that Bob just mentioned, the EXE and the EQT, and sort of moving a little bit from oil to natural gas, I mean, is there anything in the charts that you say, well, look, I would keep this running, or that's either contrary or confirms what he's saying?
Yeah, it's obviously not my cup of tea. I don't spend much time below the 200-day moving average. But Bob has forgotten more about this space than I'll ever know, so I defer to him. I do kind of like the fading oil and picking off gas. Gas seems inevitable to me. I think I've been saying that for a while, but it just seems like the demand for power, natural gas is just a no brainer in my opinion to feed the AI boom. So these are not my charts at all. But I think we're at reasonable support levels. I don't see a hell of a lot of downside. And next thing you know, it's going to be September. We're going to be talking about winter, and we'll have maybe a higher strip at that point in time. But I defer to Bob on this.
Yeah,
All right.
I mean, look, I don't know what your interpretation of the chart. Obviously, they've kind of had some down momentum here with the sell off in energy, but again, the valuation wise, and given where we see the long term strip on natural gas, I'd be accumulating. I'd be much more of a buyer than a seller. And I think you're right, based. I think there's limited downside to both of those names.
Yeah, I mean his EQT, which is kind of, I would say a blue chip in this space. I don't know if you agree with that, but I think I would.
Yeah.
And
Yes.
it's sitting at the support that was back in 24, and natural gas at 3. Is natural gas going to 2? I don't think you think so. So I think this is okay. The dividend is what, Bob, 4 something?
On EQT, I think it's below 2%. Well, maybe it's bumped up a little
Okay.
bit here, but yeah.
But again,
Um,
I like things above the 200 day, but I understand exactly what you're doing, given your energy focus. And I'm just curious, what your the more I listen to podcasts, and frankly, podcasts that hate Trump, but it's like, oh, you call this a deal? This isn't a deal. And there's a lot of skepticism as to how this plays out. I don't know what you're hearing from your sources, if maybe this
yeah.
drop down to the 80s in crude is too much too soon.
No, I'm glad you mentioned that because one of the reasons I'm not selling most of my oil names here, like CNQ, Chevron, and only pared back a little bit on EOG, is there's still a lot to be determined here, and we've got a 60-day MOU. We don't have a deal yet. You've got Iran, internally in their country, spinning it as a victory for them on their nuclear ambitions, basically. And as I've said all along, I think part of their strategy is just a stall strategy. And then now they've got 60 days to argue about really what are the details and the terms of everything they supposedly agreed to. And in the meantime, yes, Trump maybe bought himself a little bit of time with oil prices coming down here, but I still think part of their strategy is to stall, 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 and hope that politically the Trump administration runs into some roadblocks, whether it's domestically or on the international front. And certainly now the other Middle East countries are going to keep the pressure on to say, look, just we've got this far, keep it going, nail out an agreement, get this done. We don't want to go back to war, shooting missiles, or having issues in the Strait of Hormuz anytime soon. And as far as opening the Strait of Hormuz, it's going to take at least several weeks to get things back flowing somewhere close to normal. And we're down to what, 6-7 million barrels a day, maybe flowing through the Strait of Hormuz. When it was running freely as it should, it was flowing about 20 million barrels a day through the Strait. So yes, oil prices have come down, but we've got a long ways to go to know that we've got really an ironclad deal here that's going to hold. And again, if it's a 60-day MOU, Iran's probably going to take it right down to the 60th day to determine or nail down, if they are able to, the details of everything that is in the MOU. But it's going to continue to be this sort of tit for tat, and it's going to be, yeah, we bought ourselves 60 days probably without any, fighting or the war over supposedly. But at the same time, apparently part of the agreement is that Israel withdraws from Lebanon, and there's a lot of things that could go wrong in the meantime. So we're watching it very carefully. And again, there's going to be some geopolitical premium in the oil price continuing forward from here, regardless. Yes, we had said several weeks ago that the peace breaks out scenario was that oil would then probably go to $80 a barrel, and we're below $80 a barrel here. And can we pull back to 75 or so? Yeah. But are we going back below 70? No, I don't believe that we are. You're going to have, at least for the next 60 days, a still healthy geopolitical premium in the oil price that I would peg at $10 to $15 a barrel relative to supply demand operating as it should if everything, were to get back to flowing at 20 million barrels a day through the Strait and production everywhere back online. So, it's I think there's reason to be a little bit, well, more than a little bit cautious and skeptical as to how this all plays out and what sort of agreement we end up with.
Yeah, well, I think you've said it perfectly, which is they've not held to too many agreements. Trusting them, and they probably would say the same to us of trusting us, but trusting them has not been a great approach. Hi, I'm David Maris. If you like what you just heard, we've tracked every single pick we make on the show, every ticker, every thesis, every entry price, over 1,100 picks and counting. We put it together in a free report with our top 10 performers, the reasoning behind each one, and a preview of our full dashboard. If you want access, the link is in the description.